Okay, guys. So as promised, I said I'm gonna make a video about some new additions that are made on the strategy. So these additions are not that much difficult, just few things. And also another thing that I want to talk about is how you is the COT report. Okay. So about the COT report is just some people tend to struggle to analyze, they get confused and everything. So I just hope this is gonna make it easier, as simple as easier as that. So I'm gonna do it here first, then I'm gonna go to the COT. Then after that, I will go to the charts and do everything else that I want to talk about from the chat. Okay. So one with the COT. Remember, we're looking at 4 weeks report. Okay, we're looking at 4 weeks report. So say that you have your 1 week here, your second week, and then your third, then your fourth week. Okay. So what you need to understand is that you need to just understand a little thing: how many increase happened on the long and how many increase happened on the short. So you will definitely have your long here and then your short here. Okay. So let's say you're looking at let's just say you're looking at euro. Okay. So let's say you have the euro. Okay, the first week is not, it's not an increase actually. So the first week is just number of lots. So let's say you have 10k buy and then 20k sell. So let's say now the second week you have an increase there, an increase and a decrease. So here let's say you have a decrease, increase, decrease. Okay. So so what you need to check now is how many increase are there and how many decrease are here, or how many increase are here and how many increase are there, how many decrease are here. So it's very simple. These are the buys. So you check what's going on with the buys. So this is what you're gonna do. You're gonna check. You're gonna see that okay, one increase, second increase. So you have two increase here on the buy. Okay, and then you're gonna check uh, how many decrease that you have on the buy. So you only have one decrease. So it's two increase and then one decrease. This is for the buy. Okay. Then on the sell side, you're gonna check again same thing. Increase one, increase two. I mean decrease one, decrease two, increase one. So how many increase do you have? Only one increase. And then decrease, how many do you have? Two. So when you look at this, what do you see here when you check this? There is more increase in long than in short. So this definitely means that price would likely be going up, right? Price would likely be going up because they increased their buy twice and they decreased their short twice. So they closed their shorts. So like probably here they can be coming from this 20k and maybe let's say they went to 18k, okay, and then maybe they went to 19, they increase again to 19k, then they decrease again, maybe go to 17k. That is what probably could be happening here. And then here they could be at 10k and maybe they go to 12k and then maybe they go again to maybe 14k and then a decrease taking them back maybe to 13k. So still this is an increase. The orders here are increasing. Okay, so that's simple. That's how you simply need to be looking at this COT. That's how you need to look at the COT. So let's open the COT chart and I will show you exactly. I will show you some few. So we're gonna start with with this one. So you will click on it. So if you find that the easier way to check on the order straight. So if you click here, you will see that they were at 361.060 long, and then they went to 367. So this is an increase. And then after that, 369, another increase, and then 374. So they increased how many times here when you check this? So let's take out the annotates here and check how many times they increase. So it's increase one, increase two, increase three. So they increased 3 times. So you will check here on the shorts now how many times they decreased or increased. So they were at 74,836, then they went to 7438, so this is a decrease, then to 67, another decrease, 66. So here they've been what? So this was a simple one. Decrease, decrease, decrease. Okay, so that's what happened. So you can see that they're increasing the longs, decreasing the shorts. So it means that you're looking for what here on euro? You're looking for buys. So let's check probably another one. Let's check AUD. I'm also gonna go deeper into AUD because I sent an analysis, and if you really follow me and understand and you follow the strategy, you will see what happened with AUD. So let's look at this. On the long side, we had 43,797, then 44, an increase, then down to 42, decrease, then up again to 44, so an increase. So we have this here. We have this increase, decrease, increase. So increase twice, decreased once. So on the shorts, we have 48,536 down to 44,826, then up to 46, okay, then down to 44 again. So this one did what? Yeah, decrease, increase, decrease. So how many? What happened? What's happening to the long side? Long side increased at least twice. The long side increased twice. The buys, they increased here and increased here again. So it's twice increase. So the short side, how many times did they increase? Just once. So we're definitely looking for buying. Decrease and decrease the shorts, closing the shorts. So still more evidence that we're looking for buying opportunities. So that is how you need to look at this. So on AUD, so AUD is like the most recent trade that I took, which was the buy. I know I sent a sell there. That's what I'm saying. If you really follow and understand, you will have changed your mind as well about this trade, because when I sent the analysis, we didn't have the most recent report. So the most recent report made me change my bias on AUD. So AUD CAD was AUD CAD. So this is what happened to AUD CAD. Okay. So we're also the analysis, I'm gonna go deep and I will try to analyze the simple way, and I'm gonna be adding something new to the analysis, which is a Fibonacci, but we don't use Fibonacci. We can use Fibonacci or Gunbox. So we don't use Fibonacci for trading. We just want to see 50% of the move. I don't know if you get me. We want to see 50% of the move. Let's say we have, let me use this. Let's say we have a move like this and then a move like this. So what I want to see is just, I want to see the 50% of the move. Why do I need the 50%? If I look from this to here, and let me take it both sides. Actually, let me just leave it like this and draw the one that is going down. So if I take the fib from this low, the most recent high, I mean from this high to the most recent low, you will see where it says 0.5. So you can just go to your fib. Mostly the fib will be checked with any other numbers, the fib numbers, but you will just have to personalize it to just leave it as 0.5, just the middle. So we just want to see that we don't trade fib. Remember that, always remember, we don't trade with fib. We just use it to see the 50%. Even if you don't want to use fib, let's say maybe I use the Gunbox, this Gunbox here. I use it for my analysis and my trade. But if you want to use the Gunbox, you can use it. You see that this one does not have 50%, but you can just click here. It will have 50%. See? So the gun has 50% as well. So you can use gun or fib. Okay. So what we use it for is that we use it for this. Let's say you have this move going up, and then there is a demand down here. There's another demand down here. There's another demand here. Okay. So let's look at this side. You have maybe a supply here, another supply here, another supply here. So what we want is that we want to be on the safe side. So how do you go on the safe side? To be on the safe side is that if you're buying, it's like in the simple retail stores, you want to buy at a cheaper price. The cheaper price here for us is anything lower than 50. So this demand, which is above the 50% of this move, we're not gonna buy from it. Even if price retrace to it, we're not gonna look for trades on it. I know I used to look for trades from those levels, but I realized that most of the time they don't work. That's because they are mostly up there at an expensive price. So we want to use these ones below. We want to use these demands which are below the 50% of the whole move. So I hope this is clear. So we want to buy here, down here on these moves, not up above the 50 of this move. Okay, I'm going to show you an example. Again, I'm going to show you why. So that's where you need to be buying. So when it comes to selling, you want to sell where? Above. You want to sell above. Okay, you want to sell here. These are the areas that you need to be selling. Here, you must ignore anything that is down here for sale. So anything below the 50, you don't take it. You don't take it as a supply. Anything above 50, you take it as your supply. Here, anything above, for buys, anything above, you don't take it. Okay, so simple as that. That is something that I want to talk about. This is something that I'm adding on the strategy. Okay, so let's go to the charts, and then I was looking at this AUD CAD. So firstly, I looked at it from this time frame, from the daily. So on the daily, there was no proper area of like I said, I changed my mind and I was looking at demand. So there was no proper area of demand up until this area here. This was like a nice demand area here, down here. So if maybe I was looking at this demand, then I was going to look at it. But I'm not going to go deep into the analysis. But the trade was coming from the 4-hour area. So there was no demand here as well. There was a break of structure high, but there was no demand. So let's go to the 4-hour. So 4-hour here, we are on the 4-hour. So there were like lots of these demands. Okay, there were lots of demands. So let's first look at where we have break of structure. We have break of structure here. So we have break of structure here. Break of structure here. So it's enough to give us this area down here as our demand. So what are we going to do now? We're going to take our FIB from the lowest low to here. So this one qualifies as a demand. Okay, so this one qualifies as a demand. So you're gonna take and draw it. So I need to remove this because I'm gonna use it for this. So this qualifies a demand. So it was tested at least once, then price came back to it again. So this is what happened to this demand. There was this demand, there was also another one lower here. There was also another one lower. Why does the other one lower qualifies? Because this second bullish candle closes above both the previous and the previous bearish candle, so it will qualify because of closing above this. So that's something that you must always remember. So this one, the first one up here, it failed. Okay, it actually failed. So how did I look at this trade? What did I do after that? This is what I did. Okay, let's go to the 1 hour. So let's look at this one first so that you don't get confused. Let me get rid of the bottom one. So this one, so you will go to the 1 hour first. What you're gonna look for the 1 hour first? You wanna see break of structure. So this is, you have this area here. And let me just use a different color here for this so it's clear. And then you have this one here. You have these two areas here. So I was like really interested in these two areas. I was like, no, this will actually work. I was like, this will actually come through. So you see here, that's the area that I was looking at. That's the area where I took my my entries from. So this was like the area for my trade. So I was looking at this area, I was like, okay, this is even lower risk. So I took this trade from this zone. So I won't go deeper into explaining it, but 5 pip below still stopped me out. 5 pip below still stopped me out. So that trade stopped me out, went on a loss. And I was like, okay, probably these zones might not work. Probably price will drop further. And I was like, okay, let me forget about this zone. And I was looking at the lower zone here. Okay, I was looking at this lower zone. So I hope you're still I hope you will understand this. I hope I'm explaining it in an easier way. So I was looking at this zone. This one below. So price came to touch it. That's what I want to see. So I went to the 1 hour. So that one I took it straight from that time frame. So on this 1 hour, what are you looking for? You're looking for where you have some structure. So now we're going to include something else here. Now I want to show you something else, something that is called that is more deeper, called liquidity manipulation. It's liquidity manipulation. So what is liquidity manipulation about? It's simply about areas where you have, say you have this area. That's our 4 hour area of demand. So price is coming back on the lower time frames, and areas of liquidity is areas where price is actually being held. You will see price staying at this area a few times, testing it a few times, just playing around this area. Okay, just playing around. So this is where area where liquidity manipulation happens, because after that, when price is playing around the same area way too many times, people tend to start thinking that, okay, the buyers are actually holding up this price. The buyers are holding this price, are holding this level. So a lot of people will be buying here, and then they will put their stop loss just below here, stop losses below, and then price will shift down, remove those stop loss. They have the liquidity institutions, they take the money, then they will then start to push price up. So that is what you need to understand. So you need to see areas, in simple terms, you need to see areas that is holding up price. Okay, so let's look at this first. First, we're looking at break of structure. So I want you to do this. I want you to look at break of structure from this time frame and then to the lower time frame. Okay, so on this time frame we have this one. So let's check the 30 minutes also. So 30 minutes, there's nothing here. This is just drop, then up, then drop. So this drop did not go lower than this, so this one won't qualify. So you only have that there. So 15 minutes as well will not qualify, so just run around the same area. So let me show you an area of liquidity. It was right here on this 15 minutes. If I take this, I draw this, no one is gonna disagree with me that this area is a liquidity area. Why am I saying this is a liquidity area? Look at how many times price was being held on this area. Price was being held here, held here, held here in this small red candle, and then also getting held up here. So price was getting held up way too few times here. Like this area was holding up price. Any double bottom trader was gonna be in on these traders to look at this price going up here. And the good thing else about it was also breaking these highs, breaking these areas here. So double bottom traders we're gonna get in on those areas, and then the support resistance support traders were gonna be buying this support and all that. So then what do price do after that? Price will invalidate that area. It's a sign of liquidity manipulation. Boom, drops down. That is what we want to see. As institution traders, that's the move that we want to see. So after that move happens, we want to see break of structure. So we want to see break of this highs here. So this break of this highs happens here with this move. So where is going to be our areas? So our areas will be down here to here. This engulfing. That is our area that's our order block. So our order block is not going to be this one. It's going to be from the move that actually made that breakout. So it means that that's going to be the area. Then if you just draw it like this, you will see where we entered, where price entered us on this trade. Okay, so you saw the area of liquidity, you saw you saw our areas of entry, which is down here. So it means now this is where you're going to enter. So here we will go at least 5p below. So 5p below will be something like around 16p, anywhere about 16.1 or 16, just somewhere around 16p there. So that's your 5p below. Then you will have your targets anywhere up. So this one is straight, I was targeting up this area here, these highs. Okay, so those were my targets, my initial last target. So this trade is reversing and all that, probably is because it came back up on these areas here, on these areas on, if you check here on the higher time frame, it's reversing on this 4-hour area. Okay, it's reversing on that 4-hour area. So if you took a sell here, you're probably in some profit. If you took a sell on that, you're probably in some profit. Okay, so I took some profit, 3% profit, took some partial profit here on this trade at 3%. So 3%, and then I was looking at that area. So my break even, I have a break even on this trade at this zone. Just my stop loss is just below this zone here. So that I have my stop loss. My stop loss I moved to for the last position that I'm holding. My stop losses are just below here, below these zones. So normally I take pressure, take profit, then I move my stop losses. So my stop loss is just here. Okay. So you saw what I want to show you, what I want to teach you. That is what I want to teach you. I want you guys to see these kind of things. Okay. I want you guys to see this kind of thing. Okay. So I want you to see that what I want you to learn from this video is liquidity manipulation. It's very important. This is very important. Like I did backtesting, I've been backtesting this. That's why I've been getting high rewards on most of the trades, because trades like this normally gives you high rewards. So when you see this, there was this on this AUD CAD, New Zealand CAD, even GBP AUD. So I'm going to show you GBP AUD and also New Zealand, no, not New Zealand CAD, Euro New Zealand. Okay. So let's go to look at that other trade. So remember, you have to learn how to use the FIB 50% to help you pick the right zones. Okay. So this one was also on the 4-hour because there was literally nothing here on the daily. Like you can see that there was nothing. There was nothing up until some area down here, which is still far from price. Like this is the only area here that has demand, and it's very, very far from price, far from we want to trade. Okay, so we saw a demand on the 4-hour. Okay, so demand is 4. So remember, like what I'm saying. Okay, let me show you something here. Okay, I can just see this by my eyes. If you take a FIB, let's say you were selling here, let's say price was telling you to sell. If you take a FIB from here to this low down here, this area here was not going to qualify. So you were not going to look at this area as your supply, because why? This area, when you start to draw it from this body to high, it is actually below the 50% of the FIB. Okay, it's actually below the 50% of the FIB. Okay, so we were not going to qualify this area. Probably that area up there, yes, was going to be supply, but this one, it was not going to qualify. So let's look at the one that I want to talk about, which is Euro New Zealand it was showing us buys on the COT, like we already did Euronews Land in the COT. So let me first thing first, you look at break of structure. This is where the break of structure happens. Second thing, take your fib low to the most recent high. So this was the most recent high. This was also a high by that time. So that most recent high there. So this area down here, it's a very good area of demand. Why? Because this green candle, second green candle, closed above the previous and also closed above the previous bearish candle. So that's a very nice area of demand. So now you will go to the 1 hour. First, you start from the 1 hour. Then you look at break of structure on the 1 hour. So price came back in here. So break of structure on the 1 hour. What's here? Then you will check the 30 minutes. This is where I actually took this trade from. So 30 minutes break of structure is down here. Okay, so you have those break of structures there. You have the area which was tested here. So either way, if you took this entry from the 1 hour, you are gonna make profit. Even if you take it from the 30 minutes, you're gonna make profit. So another thing that I want to show you here, liquidity manipulation. This one was even smooth. This one was very smooth. So I draw it from this body to this week. And put the color for liquidity so you can see. Look at this price going up here, down, up again, coming back to the same area, up again, coming back to the same area. What will people do here? People will say that this is a support. This is a bottom. These are bottoms. People will say that, okay, this is a bottom. This area is holding up price. Then what will the institutions do after that? Boom. Take out the stop losses. Take out those stop losses which are here with this move, last drop move. Then they will then push price up. So this is like a last institutional candle. The bearish one. Last institutional candle, then push price up. So this area here, the area of entry, look at that. So when price came back to enter us, like that, very low, that very low liquidity happening. I mean, that very low drawdown happening there, probably even less than a pip for that drawdown. So you will take this area here, about 12 pip, and then maybe you can risk about 17 point something. So start 5 pip below. Then you will choose your targets. Remember, you just choose the highs. If you choose this high, you are gonna make about that 5%. If you choose the next highs, it's gonna give you even that much more profit as well. If you chose these highs, you're gonna make those such profit again. So this is how you look at it. So you see, we used fib here. We used fib to pick a zone. We used break of structure here to see for entry, and then we also got to see there's manipulation. So I'm not saying that if there's no this kind of liquidity manipulation, you can't take a trade. You will take a trade, but it's as per how I trade now, it's not high probability than this one. These ones are more high probability. So these ones are like mostly high probability trades than the ones which are just gives you this break of structure and coming back like the normal way that we were trading. So this liquidity is very important that you take trades which have this. So don't make sure that when you find a trade like this, you will actually take it. I'm not saying risk all your money. That's not what I'm saying. I'm saying make sure that you probably capitalize on it. Okay. So GBP AUD was also a buy trade based on GBP increasing their orders. So there was also nothing here on the daily. There's actually nothing on the daily, but on this one, there was this. So I'm just gonna go straight to it. So there's so many areas of demand here, so many areas of demand. But the one, when I was looking at this, the only demand which was valid was this one. So you see this one, there was a demand here. So if I take it from this low to this, that's not what I saw. This one was no longer valid. When I was looking at price, this demand was no longer valid. Okay, this was no longer valid. But there was this one which was valid back here. So this is the one that was valid. Okay, that's fine. So how was it valid again? So we need to look at break of structure right there. Flip. Right there. This area here, okay. If you were looking at this area here, you were not gonna take this any trade from this area because it is above the what? 50% of the whole move. So it's not valid. We want things which are below. We want to trade below the 50% when we're trading for demand. When we're trading for supply, we want to trade above the 50%. So this one was not going to be valid as a, it qualifies as a demand, but it's not valid for us. So the one below is fine, it qualifies. So it means we're gonna, let me just extend this side. Okay, it's the same area. So this is the area. Like I had a trade, two trades here. I did a re-entry trade now here, but I'll show you both of the trades. So these trades on this one were both on the 15 minutes. So I'm not gonna go into too much details on the 1 hour 30 minutes. So I'll go straight to the 15 minutes where I took the entry, just to save time. Looking at the first one, the entry is here. So the first one, this is the area where there was the break of structure. This is like the only nice structured area on this whole move down. I mean on this low, like this one was just too choppy. So we got that. And then look at this again, same thing that I've been showing you all over and over again. Price being held on this zone. Look at the price being held, price being held, price being held. This one was not so strong liquidity, but it was holding up price. It was holding up price. So now you have break of structure, you have this sort of liquidity happening down here, and also you have this. So also you have this area here. So this is where the entry happened. Okay, this is where the entry happens. So you could have taken a trade here, and then look at your 5p below. So this was 20. So you can just go to 25 and then have your targets, of course, on the highs. So you could have targeted these highs first. You would have made your about 6 point something percent. You have targeted the other high. You would have made about 7.7. You could have targeted these other highs. You would have made about 8% and all that. So if you targeted these highs, you would have just maybe closed your trades mostly on break even because price did not get there. Okay, so this was how this trade came about. You had that nice liquidity happening. So another one was just now. So it was from here, from these areas here. So the trade was just today. It was my today trade. Okay, so I'm making this video today. So this was the trade. So simple, price dropping, creating this down, down, up. Where did we have a break? We had our break of structure here. Break of structure here. So you can see this, that there was a lower low here. So that means that this area here, from this low to where? To here. from this to here. This is where your area of the block is not liquidity, other block. Entry other block was like that. So that was the area where the entry was about. So do we have some sort of manipulation here? We have this area here. I love to draw and cover all the lows, so to make sure that you see those rejections. So because rejection is what actually matters most than candles. So you see those rejections. Price rejecting this area, this means this area is holding up price. Then after that, what happens? Boom, price dropping down. Price drop down, taking out everyone who was buying here. And those who were buying here were also seeing what? These breakouts. Like, okay, we have this breakout. When price comes back, we're gonna buy again. So they were buying, and then what happens? Price stops them out. They get stopped out, and then when they get stopped out, price comes back to our zones, our 4-hour zone again. Then when it came back, when it does that, I was like, okay, I'm interested in this area here. I'm interested in this zone. So there was not much liquidity happening here before this move down. So maybe probably on the 5 minutes, which is I don't recommend you to trade the 5 minutes if you're just starting. But there was this happening here. Okay, so there was this happening here. Like I said, I don't recommend you to trade the 5 minutes if you're just new. You can trade it on the later stage once you've really grabbed the strategy. But there was this area here where price was being held. This is liquidity on the 5 minutes. This is the 5 minutes liquidity. See how much price bounced up, bounced up, bounced up, then boom. This spike, stopping them all out, taking their money, taking the money of those who were buying there, because their stop losses will definitely be below here. They took money there, they took money here, then they were like, okay, now we can go up. They go up. We don't go up with them at the first try. We want them to come back again to do that one last manipulation. You know what this manipulation is about. This manipulation is about the last when they come back to fill the orders, they're manipulating the buyers who are buying here. The resistance, we buy. The retests, they buy. Like these are the breakout traders here. These are the retest traders here, and then they will get manipulated one last time by price, one last time, one last manipulation. That manipulation fill us our order. So I mean, you know about that. I told you about that one. It's like the old way. So this was like about 17. So you will go to at least 22. Okay. And then, so for this one, there was this one big move. I want to show you. See this sort of imbalance here, from here to here. I was like, okay, let me target this highs here. So I was like, let me at least target this highs, which was for about 4%. So this was about, it was a 4% trade to those highs. So I got my profit on this on that 4%. So it was also there was this other trade which I got about 8%, and then got 4% on this one. So it was like a very good move. So price even did go even further, but I was targeting those. This was like the highs that I was targeting. Okay, these were the highs that I was targeting. So that is what you need to learn today on this video. That's what you need to catch on this video. You need to know about liquidity manipulation. You need to know about how to use fibs to pick the right zones so that you can avoid picking the zones which are expensive or which are very cheaper. Okay, so that's what this update is about on this strategy. So I hope that this video is gonna be helpful very much.